What's up, traders? It's Brandon from Amphibian Trading. In this video, we're going to be going over my latest indicator base finder and some of the updates that I just put out for it. Before we dive in though, please go ahead and hit that like and subscribe button, and then we're going to get started. Okay, so here we are. We have a chart of NVIDIA pulled up. I'll be moving around to a few different charts to show you different things the indicator can do, but we'll start here with NVIDIA. And what base finder does, it is a tool. It pretty much mimics the pattern recognition of marketsmith, but it also does a lot more than that. So it starts by recognizing 6 different types of basing patterns. We have a flat base, which can be seen here. If you hover over the start bar, the very first bar of any of these bases, it'll give you actually the base information. So it identifies a flat base, we have a double bottom base, a cup base. We also can identify a consolidation, which is pretty much a basing pattern that doesn't quite fit the description of any of those. We also can find a cup with handle base, as seen here in Zillow, and even high type flags like here in Square. So those are the 6 different types of bases that we can find using Base Finder. Now, I'm going to go into the settings to show you what is possible. And I'm going to start with these base parameter settings, and then we'll go back through everything else. So first one is this prior uptrend amount. And what that means is how big is the prior uptrend before the base begins. So I have this set to 30%. This is a percentage value. So you're looking for at least a 30% up move before a new base forms. So if I lower this to 25%, for example, you'll see we get this new basing pattern here on NVIDIA. And that's because if we look at how big this run up is, this was 28%, almost 29%. So not quite 30%, but it does meet it at 25. So if we go back to that 30% prior uptrend, you see that pattern's no longer there. Now, that's important. We want to look for a prior move up before the base, so we're not just getting short covering. We want to make sure that it's actually a sustainable rally before a basing period begins. Next up, we have the maximum base depth. A strong, healthy base is normally no deeper than 35%. I like to keep this, however, at 38, just in case you do get a couple outliers that go slightly below that. You can adjust this though. Let's take a look at this double bottom base here on NVIDIA. If I hover over it, I can see that it was 22% deep. So for example, if we only wanted to see bases that were less than 20% deep, I could switch that number to 20, and you'll see that this pattern disappears. We also got rid of this cup here. This flat base stays though because it was only 11% deep. So you can adjust this to see what type of patterns you want and how deep you are willing to allow that correction in the basing period. So for me, I like to leave it at 38. I feel like it captures most healthy bases and gives a little bit of wiggle room just in case, there's something weird in a base where it just dips below that 35% level you're looking for. From there, we have the maximum base length in weeks. So this is 25 weeks is what the default is. Again, you can change that. Now, this double bottom period here is 11 weeks. If we set this to 10, you'll see that the structure is going to disappear. And that's because it went longer than our maximum base length we allow. So I'm going to put that back to 25. You can experiment here with different levels. 25 to 26 is a good level I found for me personally. And next up, we have this high type flagpole minimum. So let's go to Square where we have a high type flag. So if I hover over, again, the first bar, I get this label that pulls up, and I can see that the pole run up was 107%. Now, this is set to 100%. If I switch this to 110%, you'll see that high type flag is no longer there because this run up doesn't meet those requirements. On the other hand, say I lowered this to, let's just say 65%, you can see the pole length is shorter because it meets that requirement quicker than it does when it's set to 100. Okay, now that we've gone over the base parameters, let's go ahead and look at some other settings. So we're going to go back to this chart of NVIDIA, and we will start with the base outline color. And this pretty much just is the line color for the bases that you see here. You can go ahead and switch this to any color you want. If you wanted yellow, white, again, whatever color you want that fits good on your charts. I'm going to go back to green for the default. Next up, we have the line width, and this just determines how thick these basing lines are. If I set this to 3 or 4, you can see the thickness of the lines changes. Now, these breakouts, show breakouts, these green triangles here on the breakout bars. That determines if you want to see those or not. I like them there just to show that there was a breakout. Next, we have 3 weeks tight. And what these are these little circles that you see on the chart. You can change the color of those circles if you want, and you can turn off showing them at all. I'm going to leave them on. And what a 3 weeks tight is, it's when we have 2 weeks with consecutive closes that are less than 1.5% away from the previous close. So here, this bar, we closed up 0.98%. The next bar closed down 1.42%. So both less than that 1.5% change. So we get this circle plotted around the middle bar there. If you skip forward a few bars, you can see here we have 2 circles. So we had 4 weeks tight here. We have these 3 weeks with tight closes and then these 3 weeks as well. So each one of the middle bars gets a circle. Okay, back into the settings. Next, we have this show accumulation distribution count of the base. If I turn that on, when I hover over a basing pattern, you can see on the bottom under the stage, it says A1, D1, and N1. So that means there's 1 accumulation week in that base, 1 distribution week, and then 9 neutral weeks. So you can turn that on or off, and you can do that for all of the bases. You'll see it when you hover over in their labels. Moving on, this next one is heavy volume without further price progress. So you hear Bill O'Neill talk about this in certain videos. You'll see it on some of the charts that he marked up in How to Make Money in Stocks. So what this does, this colors the bar to whatever color you select here. If you want it to be white, which is the default, you could switch it to a different color. You can turn this on or off as well, but I'll leave it on for this. And what this is when we have heavy volume. So the volume is going to be heavier than the week or day before, but the close is going to be less than 1% difference. Now, this is often seen at tops or bottoms. It's a sign of support or distribution depending on where it's at. So you can see here, this bar had a very high closing range. That would be shown as a sign of support. Also, if we look at something like Zscaler, you can see right here at the very bottom, we have this white bar, heavy volume without further price progress down. That is the turning point for this stock. It's not a given that a stock will reverse from this level once you have a heavy volume without further price progress, either down or up, but it's just something to pay attention to because it does show signs of support or distribution. Okay, so back into here, we have this show base flaws. Now, what this does, if we go to, let's see, this chart of Amstar Pharmaceuticals, you can see this basing pattern here is yellow. It's not green, and that's because I have the show base flaws on. If I turn that off, it'll just go back to green. So what the indicator does, it looks for 2 different flaws. First one is a wedging handle, which is pretty much when you have a cup with handle base and the handle fails to shake out any weak holders, it just drifts up instead of drifting down. The second one is living below the 10-week line, and that's when we have 8 or more weeks where we close below the 10-week line, which on this chart is this maroon colored moving average. So you can see here we clearly close below this for multiple weeks. Okay, next up we have this show failed bases. Now what this does is it shows the basing structures for bases that either were too deep, that went beyond this maximum base depth, or they lasted longer than your maximum weeks. So for instance, if we go to Affirm, we had this high type flag that was forming. However, once we get to this 3rd week, you can see we got below that 25% threshold we look for in a high type flag. It was close at 25.02, but it is technically below it. So therefore, the basing pattern stopped, and that is why if you turn this off, the show failed bases, that high type flag will disappear. Okay, moving on, we're going to get down into these target zones now. Let's go to something that had a recent breakout like NVIDIA. And what these are, you can see here, we have these 3 different rectangular boxes. We have a blue one, a green one, and a red one. The blue one represents the buy zone. So by default, this is set to 5%. These are all percentages. So it's going to say if you are at the pivot point, which is the bottom of this box, up to 5%, you're in the buy zone. From there, we have our stop loss, which is set to default 5% below the pivot, and then to 7%, so 2% past that. And lastly, we have our profit target, which is 20% by default, and then up 5% more from that. So you can change all of these different percentage points based on your style of trading. For me personally, using 5% past the pivot is too far. I like to go somewhere closer to 2%. So you'll notice as I change that number, this box gets a lot smaller. Same thing with the stop loss. Say you wanted to take a 3% stop. You'll notice this box is going to move up. And now you got 3% to 5%. So it's going to add a zone. So you're going to be whatever number you pick, and then 2% lower is going to make up your zone. Same thing with the profit targets. Say you are more of a swing trader and you're looking at 12% profit as your target, getting that 4-to-1 risk reward with a 3% stop. You'll see this drops down to a 12%. You can also turn these zones on and off by clicking the show target zones. And lastly, we have this show profit target hit. I'm going to go ahead and just set these back to the defaults really quick. And now looking at this show profit target hit, you'll notice we have this green flag here. And what this flag is when we get to our profit target in 3 weeks or less, and that triggers Bill O'Neill's 8-week hold rule. So that's why the green flag is there. Okay, so we switched over to a chart of Netflix. Here on this first base down here, we have the green flag showing we hit our profit target in less than 3 weeks. These next two, we have these green triangles indicating that it took a little bit longer to get those profit targets, but nonetheless, we did hit those targets. From there, we have our show sell signals. Now, these are only going to show up on the weekly time frame, and you can change the color of these, but let's go ahead and look at a few examples. I'm going to go back to Nokia, which had a monster run back in the day. And I just want to show you, look at this run from, was this $2, obviously split adjusted, up to 60. Now, right here at the top, we have 3 different X's showing that we had 3 different sell signals. Now, if you would have caught any of this run and sold right at the top, you would have been very happy. So this first sell rule we have is the 2 weeks down, 2 weeks up. So whenever you see a sell signal similar to the basing patterns, how if you hover over that first bar, if you hover just over the X, it'll tell you what the sell signal is. So this first one is 2 weeks down and 2 weeks up. So what that is once the stock makes a new high and then pulls back down to its 10-week moving average in 2 weeks or less, and then rebounds to a new high in 2 weeks or less, that's a rare sell signal that Bill O'Neill had 2 weeks down, 2 weeks up. So the indicator is going to flag that and tell you to get out. Next, we have railroad tracks. And what this is, and we have 2 wide range bars that have super close closes. So here we flag our railroad tracks, which is also another rare sell signal. From there, we also have a standard sell signal that you'll see a lot is this 10-week break. And what that is it's looking for a bad break of this 10-week moving average where we close below it on increasing volume and the close is 4% or more below it. Now, I didn't want this to just flag every time that we close below the 10-week line, such as that. So there is a stipulation that it's only going to flag it if you are a certain amount of weeks away from a breakout period. So that's why you don't see it here or in some of these other periods as well. Okay, and then lastly, let's take a look at the climax top. Now, I'm going to go to Southwestern Energy for this one. You can see we had multiple sell signals along the way, like a 10-week break here and here. However, you did have other opportunities to get back into the stock. As we get higher up here, we have a 2 weeks down, 2 week upsell, and then here we flag our climax top. So 2 weeks that showed climactic action. Here right at the top of this move, before it went in, it based, and then it put in a faulty base and ultimately broke down there. The last thing we have to look at is the show base health table. So I'm going to turn that on. We're going to go back to NVIDIA. And what this does is it's going to show us the health of this last base. So here we have the date of the start bar. So 11/20/23, which is going to be this bar here. You can see during this, we had a net advanced distribution of 1. So we had 1 positive week. Again, if we turn this show accumulation distribution counts on, you can see that in the label as well. We had 1 accumulation week, no distribution weeks, and 6 neutral. That gives us a score of +1 there, so it's green, indicating more accumulation than distribution. From there, we have the number of tight weeks in the base. We have 3. So we had 3 closes with less than 1.5% change between them. Next, we have the highest volume, which is bullish. So this is going to look for the highest volume of the base. It's going to tell you if it was a support week, an accumulation week, or was it distribution or stalling. So if it's bullish, obviously that's good. If it's bearish, you don't want to see that. Next, we have the largest spread of the week. That's looking at the high to low for a single bar. And again, that's going to tell you if that bar was an accumulation week, distribution week, or was it distribution or stalling. And then next, we have the number of RS weeks. And again, with this table, if you hover over any of the columns, it'll give you a quick, brief explanation of what each one is. So RS weeks, we had 3 weeks that distributed RS. Okay, and the way I'm looking at relative strength in this is not just your standard relative strength where you divide the price of the security by an index to compare it. I'm actually looking for an alpha adjusted relative strength. So this is using something like Matt Caruso's alpha bars, which if we pull them up here, you can see anytime that there's a blue bar, that means that the stock distributed alpha relative strength versus these red bars where it's negative. So we have 3 weeks in this base that showed relative strength. Here's 1, 2, and 3 there. Lastly, if you do have a flaw in the base, if we go back to this Amstar, it'll tell you what the flaw was. So here, living below the 10-week line, and that's going to show up there as well. Okay, guys, that's it for the base finder indicator. Go ahead, get in here, change these settings, make it work for your style of trading. Hopefully you find it useful. If you do, please let me know. Go ahead and hit that like and subscribe button, and we'll talk later.